What I would buy right now would be copper and oil stocks, no question. Nickel and lithium are interesting. I'm more inclined towards lithium. Both are hated right now. Like something like that that could make a big new source of demand would potentially get me excited about cobalt. But no, I've long said in this context, so long like over the last year or two, that I like the two yellow metals as sort of a self-hedging component to my portfolio. You and I know that uranium is recession resistant.
What is Lobo Tiggre buying right now, if anything? And what metals is Lobo Tiggre bullish on? And I think that's about enough times of me saying your name, Lobo, for the algorithm to pick it up. But yeah, essentially, I want to run through a dozen or so different metals with you today and have you rate them kind of on a scale from 1 to 10, really. And it's going to be a contrarian scale. So, how contrarian of a play do you think it is? We'll run through as many of the metals as I can think of. And then for people listening, it's a short episode this week, really. I've only got one CEO barbecue for this episode, and that's Minaurum Gold. But we're actually going to talk mostly about their silver project. So please use the timestamps. They are on your screen right now. They're in the description on the YouTube video, and they're also on the time bar to navigate the whole video. But Lobo, let's start with what you're paying attention to right now. And is there even something out there worth being contrarian on now? What are you doing? What are you paying attention to?
Well, there's absolutely things worth paying attention to now, getting ready, but that's different from saying buying stocks now. So if you're saying, what am I buying contrarian wise now? The answer would be nothing.
Well,
As you know, I'm still in team hard landing. We don't need to go in this direction. We want to talk about the metals, but just real quick, there's been, I think, irrational exuberance is ever and always the best description. But it's just crazy to get one blowout jobs report and suddenly everybody's talking no landing again. Everybody's happy, happy, joy, joy again. I mean, this is just crazy. Even if I was on Team Biden or something like that, but still rational, I would say, well, this is one data point. Like there's this trend of accelerating upward curving unemployment, and we've had one positive jobs report. That doesn't undo the whole context. And yet to listen to the mainstream financial media, it's like this one thing has just proven that there's no problem. American exceptionalism is live and well. The US economy is healthy and strong. Like everybody says, never mind the 27 gazillion other indicators. Like this one thing has made everything fine. And I just it's not just being a contrarian when something is so overdone like that and so ridiculous. I mean, it's just, as I say, you don't have to be a bear to call BS on that. It's just not supported by the data, and I think that's an opportunity. So when the herd goes clearly in the wrong direction, I do think that's an opportunity. But so I think that the scales will fall from their eyes. I think it could be the next jobs print. It could be CPI tomorrow. I don't know what the next data point that the markets go crazy on will be, but I think there will be one or some or many. And I do think we're still headed for that hard landing, with the one caveat being Lynn Alden's fiscal dominance, right? If the deficit just came out today of 1.8 trillion, it's just like, and yet we have the greatest economy in the world, right? But we're spending trillions of dollars at deficit spending because everything's so fine. So if we don't get a hard landing, it will be because the money helicopters I've been talking about. My hard landing scenario wasn't years of recession. It was realization, send out the free money, the easy money, and then off to the races again. If that's been done preemptively, then we may not get the hard landing, but we still get the off to the races part, which is where we're going to answer your question. So I'm not buying now. If I thought that fiscal dominance meant that there will be no hard landing, no even recognition of the hard landing, it's just off to the next reflationary boom, the bottom is in, then I would be buying. What I would buy right now would be copper and oil stocks, no question. Like I wouldn't even hesitate. I would, after we got off this interview, if I was convinced of that today, I would look for the best opportunities in copper and oil now. while both are still relatively on sale. Oil did have a bit of a surge on Middle East war news that has faded today and yesterday. And so that opportunity there would be of interest to me if I was convinced of this. Bear in mind, I'm not. I'm still thinking that we need more capitulation before things really turn around. And I still think there are prices to be paid that even fiscal dominance won't be able to completely overcome. As for other things, you've got your questions, we can go through them, but I would wait until I see how the market is responding. So my favorite examples of this are lithium and nickel. When the recession has done its worst, or fiscal dominance or whatever other factor, I'm just wrong. There is no recession, and a team soft landing or no landing is right, and it's happy, happy, joy, joy. At that point, when that's obvious and we're in the next big move upwards, then I need to look at industrial metals. And the two examples that I brought up of lithium and nickel, both are important industrial metals. Nickel has much bigger and broader usage, but the lithium also has the EV factor going for it. It has the politically correct critical minerals mantra going for it. So they're different. I would look at how the market responds to these things differently. Both of them are in oversupply right now. The market did respond to high prices. In both cases, high prices cured high prices. The difference is that in Asia, and I got to toot my own horn a little here, we did right before it happened that there was tons of nickel available in Asia. And there was this narrative put out by, I think, shameless promoters that, oh, it has to be class 1 nickel for the batteries. Well, no, it turns out it doesn't. It's nickel's a metal, it's fungible, right? And a flood of nickel supply from Asia, nickel pig iron, that and conversion has completely upended that market. Whereas lithium, high prices did cure high prices. There's a big supply glut at the moment with I think recessionary influences dampening EV demand. But the EVs aren't going away. The powers that be are going to push them, whether we think there should be subsidies or not. And younger generations want them, whether we agree with them or not. You don't have silver hair, you tell me. What I'm saying is, like, both of these are in oversupply now. Both of them, the prices are in the tank. Neither of them would I buy right now. But on the other side of this, recession denier capitulation or Lobo's wrong, either way, right? Then I'll look at the market, and with companies scaling back production, companies canceling extensions, mine builds not happening, either one of those could be of interest. I have a feeling that lithium is more likely to bounce back quickly than nickel, but I'll be looking at both because both are important and essential minerals in many ways. But and I don't know where you want to go from there, Antonio. So my answers are oil and copper are the no-brainers. Nickel and lithium are interesting. I'm more inclined towards lithium. Both are hated right now. But I need to see the market dynamic. I wouldn't just say, oh, okay, the recession's done its worth, I'm going to buy lithium and nickel. I would say, okay, the recession has done its worst. Now which one's picking up? Has the supply destruction or has the cancellation of new plans affected the balance of the market? And I would make a decision at that time. And if I was making that decision today, like if I was in team no landing, if I was making that decision today, I would say not enough data. There's plenty of data for copper and oil, but not enough data for lithium and nickel. Where do you want to go from there?
Well, this was a great interview. Thank you so much. No, it's I do want to go through them maybe one by one, and you can kind of give me a score from 1 to 10, maybe with 10 being absolute contrarian heaven and 1 just being not touching that at all, even if the situation turns. And maybe we can start with the worst performing metal on a year-on-year basis, which is indeed lithium. You're touching upon it, but lithium has been in the news a lot lately. There's big M&A happening too. So yeah, where would you put it on a scale of 1 to 10?
I really need a crystal ball to hold up during these interviews, but I put that at pretty close to a 9 or a 10. I do think that there's a lot of EV haters out there And yes, as an anarcho-libertarian, I hate subsidies and I don't like the way EVs have been pushed down the throats of the public around the world. But again, what, like it or not, doesn't matter. As an investor, I have to look at the trends. They're not going away. And yes, there's a lot of changes coming in that space. Maybe hydrogen fuel cell cars will end the EV revolution, if you like. But that's a decade away. And coming out of the recession, if Team No Landing is right, it's like next month. And if I'm right about capitulation having to happen first, it's next year. And the lithium battery is still the dominant technology. Nickel, though, however, is not necessary for those. The LFP batteries, which have no nickel in them, have been getting better and better. The latest versions of these are on par in terms of range and charging as the nickel ones, and they're safer. They don't catch fire so easily, and they're cheaper. So it's while this is happening, the market, like while we're waiting for clarity in the economy, the auto sector is increasingly moving towards the non-nickel batteries. So we could see a resurgent come out of the other side of the recession. That's great for lithium because it's still the dominant technology, but not for nickel because it gets no tailwind from that. It's just the same old nickel that goes into steel and so
on. So lithium close to 10, what nickel close to 1?
Well, it still is important. I mean, we got to have nickel for many things. After Dr. Copper, nickel is one of those global essentials. And it really didn't move as much as lithium. Like lithium, it's used in paints, it's used as a medicine, it's used in other things. It's a lubricant. But those are tiny uses compared to the EVs. The EV came along and just blew the demand for lithium out of the water. The EV demand for nickel was a smaller part of the battery of a much larger market. And so it was much more incremental than game changing for nickel. So I'm not sure. I wouldn't put it at a 1, but I would put it below 5. It would take a lot of convincing for me to see that, yes, the economy, the whole economy, forget the EVs, the whole economy has to be growing at a robust pace, even if it's growing for the wrong reasons, right? A reflationary boom. I need to see a pace for the overall economy that would put the demand for nickel back on the table, perhaps faster than the companies can ramp production back up again.
I know, though, that for your own portfolio, you oftentimes take the approach of bottom up. So you start at the asset level, if you like, and you'd get involved. Would you get involved in a to be or a growing lithium discovery, though? Because what I'm wondering here is, do we need new lithium discoveries, even if lithium goes up?
No, that's a good question. Probably not. Now, markets are prone to irrational exuberance. So an exciting lithium discovery, if you could know it was going to happen in advance, which of course nobody can, not even Rick Rule, not even Doug Casey, nobody knows when a discovery, before a discovery is made that is going to happen. So, if somebody buys a mothballed lithium discovery, or maybe something that like a lot of interesting gold projects came out of the old Santa Fe, which was a railroad back in the day, and they had a lot of land. And so these lands were held off exploration and, much farther ago. And then in the 70s and 80s, they became available for exploration. So there was an opportunity there that wasn't unknown, but it was held off the market. So if I could find something like that in lithium, where there's a resource, even maybe a reserve that's known, but has been held off the market, that could be exciting because there'll be a short path to value added there. It would be like getting ahead of the pre-production sweet spot, which is one of my specialties. And I would also look for something that is a pre-production sweet spot play. If there's a lithium project that's been waiting around and then the market turns up and then the financing's there, the permits are there, and now we can get to production, that would be of interest to me. And probably, on the other end of the barbell, I would look to the big producers. If SQM is probably too big, but if Albemarle hasn't been bought out, right? If it's still a company at that time, is it going to be a hockey stick on some discovery? No, It's one of the bigger players in the space. But if the metals price, if the commodity starting at the bottom, as you say, goes up, Albemarle will go up. I'm not recommending that. I haven't made that decision, whatever. I'm just saying that I could see something like a big player in this space that will respond to higher metals prices, maybe not offering as much reward, but it has so much less risk that I feel much better about making that than trying to guess on an exploration play. The bottom line answer to your question is lithium's not rare. It was not a surprise for high prices to cure high prices. Making a new discovery when the last round of high prices put a lot of discoveries on the table right now that aren't going anywhere. Like, objectively, that's a hard sell for me. I don't need a new discovery. There are plenty of discoveries waiting to be moved forward.
But doesn't having those discoveries and especially what came out of Africa, which I suppose nobody expected, which is why I said lithium corrected that hard, doesn't having them around kind of put a cap on the lithium price and therefore limit your upside potential and maybe, push it below a 9 on the contrarian scale?
Yeah, but you're assuming markets are rational. That makes sense. That's perfectly logical. I'm just not a believer in the efficient market hypothesis. Markets get overbought and oversold all the time. That's really how speculators make money. If everything was rationally priced, there would be almost no room for speculation. You'd have to gamble really on unforeseen events.
Well, I have made that mistake before because I oftentimes assume my wife is rational, and I should have learned from that. Staying on the topic of battery metals, the Lobo, Cobalt is the second worst performing metal. It's down about 30% on a year-on-year basis. Do you have the same take on it as you did on nickel, or is it kind of lithium camp?
Yes, and for the same reason. Well, but cobalt is more vulnerable because nickel, as I just explained, it's used in so many things. It's a big metal, if you will. It's a big, important industrial metal like copper. Cobalt, not so much. It's a smaller market. It's more niche. So the disappearance of a big use case is a much bigger impact. And so those same batteries that don't use nickel, they don't use cobalt either. The nickel and the cobalt go together in those batteries. So I'd have to be, it might take a new use case for cobalt to get me excited about, like a big one. Forget the batteries, forget something else. Maybe, I don't know. There's some new magnet that makes all wind turbines 100 times more efficient, and you got to have cobalt in it. And it's much cheaper, by the way, than those really exotic rare earths that they use in a lot of those magnets. Like something like that could make a big new source of demand would potentially get me excited about cobalt. But no, just economic recovery wouldn't do it. Even EV recovery wouldn't do it.
I'll just cross manganese off the list then in that case too.
But no, actually manganese has more uses than cobalt. So cobalt, you can put it a 1 or a 0.
Oh, wow. We don't
manganese,
like cobalt.
Maybe a 4 or 5. I mean, it's an industrial mineral that has many uses, and in the batteries is just one.
Okay, well then, following that logic of NMC batteries to LFP batteries, what's the LFP? Iron phosphate?
Yeah, so iron, not rare, right? So that's not going to make any difference to the iron market. The phosphate market, it could. And there's different kinds of phosphorus and phosphates and different. This is one of those things that's kind of like graphite, which you might get to as well. Theory, graphite's just carbon. But the fact is that the form of the graphite comes out of the ground if you're mining it instead of producing it is very inconsistent. And the degree of impurities, the size of the flakes of the graphite make a big difference. Generally, big flake is better. But it takes a lot of testing. It's not just like if you've got copper and 99% pure copper, copper is copper, and all the end users can use the same copper to make whatever they're making out of it. It's copper. It's not like that with graphite. And I got off the side on the graphite from...
We were talking about iron and phosphate.
Oh, right, the phosphate. So the phosphate isn't quite as tricky as the graphite with all the different forms. It's less polymorphous, if you will, the fancy word. But it's still one of those things where it's mostly a fertilizer. It's mostly used in other things. This would be a bolt-on demand case. I don't know how big it would be. And, the quality of your product, you probably end up having, like, there's no LME for phosphates for batteries. So you're going to need to make contracts with end users or offtake agreements. You're going to need to provide like lab, not just like scientific laboratory level of purity or consistency of results to show end users that my phosphorus, phosphate, whatever my product is what you need for your batteries and you can use it. And so there's a lot of work to be done there. So in that space, if I had a deposit that was coming online and I had in a company and I had contracts, offtake contracts with people who are ready to supply the LFP market, then that would be much more convincing to me than just some discovery stage or oh yeah, we've got this mineral. It would take some pretty advanced work. Maybe not full feasibility level, but at least pre-feasibility level, including offtake. The offtake is key there. So not a lot in that space. That could be interesting. And again, this is also one for after I'm sure the recession has done its worst, and if the EVs come back, and if I'm right about the LFP battery being the dominant choice at that point. So there's a series of ifs that have to be made before I buy into one of these. And then there's the question of what kind would I buy, which I'm describing. So I wouldn't run out and buy any of this today. It would be something, that would be my thought process. What would get me to the point of buying, and then what I would look for at that time. And then since I went to graphite, just to carry on, same thing, but even more so. Like it's much more particular. The characteristics of the specific deposit in question are really important.
Well, I spoke to Rick Roll about graphite not too long ago. He's not a huge fan because he says not rare, not hard to find, not hard to bring into production. Though the flake thing that you say is correct. I've interviewed a couple of companies too. So that's actually an interesting. What would you put it? 5, 6, kind of a same line with manganese, nickel, or
by
higher?
the way, so yeah, and on the plus side, from if there's a huge EV resurgence, the graphite goes into the I don't have the right term. I'm not an engineer, but it's not the battery material. It's in the connecting thing. It's not anode, cathode. I don't know what the right term is. But as I understand it, it's not, whether it's LFP or whether it's NMC, they all have graphite. So the demand case from larger, batteryification of the world, if you will, in whatever use that goes into, is positive for graphite. But then all these other factors come in. So I'd want to see offtake agreements. I'd want to see, customers say, yes, I like this graphite from this mine. So I can't give the commodity a number. It's company specific, it's deposit specific. At that time, not now, but at that time, if a company had the right kind of deposit and had the offtake agreements, then that would be pretty high, maybe a 7 or an 8.
I mean, I think that's a good warning. That's a good message there, because oftentimes companies will be like, oh, actually, it's not a lithium ion battery, it's a graphite battery, because like 30% or whatever, 28% of the battery is actually graphite. And therefore, you should buy our stock. But then there's graphite and there's graphite. So I think that's a very good point that you make there.
A broader takeaway lesson here. This is easy, do it yourself at home message from the old due diligence guy is, if any company presentation spends more time talking about the market, making the case for silver, graphite, whatever it is, than about their deposit, that's a red flag. Right? They're distracting you with how wonderful the outlook is for titanium or whatever, and they're not telling you anything about their metallurgy. Run the other way.
That's actually it's a rule of thumb that I've heard before, and maybe we'll talk about it once we get to uranium, because I know a lot of uranium companies are guilty of that, because the nuclear thesis is very exciting. But What else is in batteries, now that we're on that topic, is aluminum. Aluminum is, I believe, the second largest component of batteries at close to 20%. Is there a way that you would get exposed to aluminum? And is that something you would have done? What would you rate it?
And
Talk to
it's
me about
also
that.
used in the frame of the cars, airframe, so many things as a strong, lightweight metal. I mean,
Hmm.
relatively strong, lightweight metal. I'd class it like nickel. It's used in so many things. The battery case is it's a tailwind, but it's not a very big one. So I
Hmm.
would look at the overall economy when deciding about aluminum. I can tell you, as a fact, I've been in this business for a couple of decades now. I have never once bought an aluminum stock
Hmm.
in that whole time. And it's not because I hate aluminum or because I've been a bear for 20 years. I don't even think I've written about aluminum as the independent speculator anyway. But it's one of these big industrial metals. And it's also one that's dominated by just mega deposits. It tends to be the sort of thing that juniors don't even bother exploring for. And if you find something that could actually make the grade as a mine, a junior's not going to build that. These are multi-billion-dollar projects. And it's not enough to find a great big deposit somewhere. Aluminum is so expensive to process, huge amounts of electricity required to produce those aluminum ingots. So if you're not next to a big hydropower dam, the offtake of which is not already sold to other customers, right? Or some big source of inexpensive power, the economic challenge goes way up for that deposit. And if it's out in the middle of nowhere with no power around at all, it almost doesn't matter what you discover out there. The location is a key issue in that aluminum space. So, it tends to be the sort of thing that your Rio Tintos or BHPs or companies that I never own because they're just too big for my interest. That they develop these things. No, Alcoa, but it's a market I can see participating in. If I got really excited about aluminum, and by the way, these very things that I'm talking about as being reasons why I don't buy, in many ways, these are moat things. Like if for some reason demand took off, it would take time for supply to catch up. Maybe a lot more time than nickel or lithium did back in the day,
Yeah.
because it's just some cheeky junior is not going to come along and produce a high grade aluminum mine and put it on the market. It just doesn't happen. So I could see that being an interesting thing. In that case, I might just buy an ETF. Like if one of the big mining companies in the world benefited from that, they could have exposure to nickel dragging them down at the same time, or something else could be countervailing that plus. So in that case, I might just bet on the metal itself.
I've seen a new argument that first time I heard it, I thought like, oh, this is some kind of a new level of copium and hopium at the same time. Is where people are saying, oh, don't worry about this deposit or this junior. There's going to be an auto manufacturer, a car producer is going to come along. They're going to buy this thing. They're going to put it into production. That's not traditionally what we've seen, or rarely at least in the big metals, iron, aluminum, and whatever else. Do you think that could be the new reality? Like, are we going to start seeing it, vertically more integrated?
No. If that did happen, that would be a reason to sell the car company or whoever making that
Hmm.
decision. It's a
Hmm.
completely different business. I remember when there was talk about Tesla doing this. I don't have access to Elon Musk. Elon, if you're listening, give me a call. Be happy to discuss minerals and mining with you. But I just thought it would be a horrible idea for Tesla to get into the actual business of mining. It's not what they do. They're a tech
Hmm.
company, not a miner. Um, and there was a point a couple years ago, I think now, where there was some junior up in Canada that was rumored to be on the acquisition, like Tesla was going to buy this deposit, I think it was lithium or something. Um, and the stock went nuts. I don't know how that rumor started. I don't know whether management had anything to do with that. Um, they might have said something like, we have the kind of product that Tesla could use. And somebody went crazy with that and said, oh, Tesla's going to buy this company. And it was like a 10 bagger on this Tesla rumor. And of course, Tesla didn't buy it. They never went near it. They didn't buy into it. They didn't take a stake in the company. They didn't have an offtake. Like Tesla had nothing to do with this at all. And the thing cratered afterwards. Uh, so but when that was happening, I was thinking to myself, like, if it was true, I was thinking, oh my gosh, Elon, if you're thinking about this crappy company, sorry, that's a technical description. Maybe I shouldn't use that. You need help, brother. Call me, please. I can help you make it better. I may not get everything right, but I can help you do better than that. So yeah, no, I'm not a fan of that idea, and I think it'd be counterproductive, not a good thing. And if I had a junior pitching me on buy or deposit because XYZ famous tech entrepreneur is going to buy as a critical mineral, that would be a negative. That would be a red flag in my view. I want to hear, buy our stock because our project has merit. Here's the study. Here's the economics. We're trading at a huge discount to our value, our measurable value, because of market conditions, not because of the merit of our project. That would be interesting to me.
That's on the same topic, though. We could go into steel and iron. I suppose steel is a bigger part of an EV and of a car, I suppose, as a whole. Iron and an EV battery, I mean. But I did expect them, I mean, given the Chinese stimulus package, because they're much more than that, right? They're not, I wouldn't say it's steel and iron or battery metals. That's not how I have them classified in my head, although I suppose they partly are. But I would have expected with the Chinese stimulus package that you would have already be getting bullish on those two. What do you see?
Well, in the first place, iron did respond to the announcement, the big announcement from China last week. And, there was a significant surge on that. And then reality set in. And I posted on Twitter, X, sorry, Elon. I think we're going to have to rename it X, sorry, Elon, because everybody says that. I hear Peter.
No wonder he does not want your advice. You're misnaming his company, so.
X, sorry, Elon. That has a good ring to it. Anyway, when that announcement was made, I said, hey, look, and the markets went nuts. In the US, like there was a response in gold as well as a response in several markets. And I said, they haven't done anything yet. They've announced an intention. And, even if they do something, what will it be? We know that they don't want to create a new bubble in their property sector. So, irrational exuberance again. And lo and behold, there's been a spate of headlines this week. I just posted on X today one of these headlines of, China's stocks are tanking and iron is down again because this irrational exuberance over China's stimulus has met reality where they haven't actually done anything yet. It's not clear what they are going to do. And it is clear that they don't want to ignite a new bubble. I can't confirm this, but I have seen data saying that the impact on the real estate market in China has not been to stimulate new construction, but to stimulate turnover of existing inventory, which I think is what they want. So, that doesn't create more demand for copper pipes or, aluminum transmission lines or, rebar for buildings and all this stuff. So I think that was hyped up. I think that was a mistake. I think the reality always matters at the end of the day. We're seeing that now. And it remains to be seen what kind of force this China thing will be going forward, which brings us back to basically the same answer I gave you for nickel or aluminum. This is one of those big industrial metals. I mean, really, the civilization above the Stone Age requires metals of all kinds. But in many ways, we're still in the Iron Age. I mean, iron isn't everything. It's, okay, it's steel, but iron is foundational for our civilization.
Yeah.
So if the economy goes for right or for wrong reasons, but if it goes into growth mode again, credibly, the global economy is looking up again, then that's bullish for iron, steel related products.
Putting them both at 5, then in that case, it does make me think about related stuff that are related to it, like zinc and lead. Typically,
so I wouldn't put them as a 5. It's not a middle of the road prognosis. It's an if or.
Okay.
Like if there is a reflationary boom, or if I'm wrong and we just get this wonderful no landing and growth again in the global economy, that's bullish. And I would put iron, maybe a 7 or 8.
Oh, wow.
But if we're still going into, a deepening global recession and capitulation in the US, then it's a 1 or a 2, right? Until that's resolved.
Well, I assume though you'd have the same take on copper then in that case, because that's closely related to China. Kind of as China goes, so does
Well,
copper.
remember I said I wouldn't buy copper now myself.
Yeah.
If I was convinced that that Lobo Tigre guy was wrong about the hard landing, then I would buy copper and oil today.
Yeah.
If I was on Team Tigre, then I would wait because I think we're going to see lower prices before they head up.
Hmm.
But yes, that is similar. And like today, I'm not a buyer at all. On the other side of the recession capitulation or Lobo's wrong, then I'm absolutely a buyer. I put copper and oil at 9 and 10.
That's exactly what I was going to say. Where I was going with this is that copper does have better supply demand fundamentals, better from our perspective as speculators, though.
I'm thinking of an interesting point about this. What we're talking about is a bimodal distribution, right? You have a binary outcome, so it's not surprising that you get a bimodal distribution. So, like if you added up all the scores that I'm giving you in this interview at the end, and you say Lobo's rating the overall commodity market of 5, that would create a completely different impression from what we're actually saying. Because they got a bunch of 1s and 2s, you got a bunch of 7, 8, 9s, right? It looks like a 4 or 5 in the middle if you average it all out, but that's not what we're talking. That's not what it looks like in reality. I think the same thing happens with national statistics when you look at like unemployment numbers and you see areas that have high unemployment, and then you look at the national average and it looks like everything's fine. Or if you look at spending and things, you take a national number and it looks like, well, gee, the consumer is healthy. Well, no, if you've got people on the high end that have benefited from the government's easy money policies, buying yachts and Ferraris and Lambos and things, right? And then you've got the guy going to Dollar General and can't afford half the stuff on the shelves, so that Dollar General is reporting lower sales, right? You're going to end up with something like the 5 in the middle. And this is, I think, not a tinfoil hat conspiracy theory. This is just statistics. And it's why I think a lot of these national statistics are so misleading. And when these Wall Street algorithms take the new number and plug it in and the stock market responds in a zing, instantaneously, they're making a mistake because the reality doesn't match that average number.
You don't have that many 5, actually. I mean, there's a couple, but you did have a Cobalt.
No, I'm saying if you win at the end of the interview and you averaged everything and came out with a 5,
sure,
it would be different from what we're saying.
Yeah, I don't think that's going to be the case either. Like you do seem overall bullish if you're wrong. I mean, if there's not,
or on the other side, either I'm wrong or it happens and then we go into reflationary boom. Yeah, I'm actually. So yes, that is a takeaway. I'm very bullish on commodities writ large. The question is when to buy.
True.
Like I would make a super cycle case, if you will. But the next big move for the industrial part of that could be down. And even people say, oh well, lithium, nickel, they've already tanked so much. How much worse can it get? Or famously, one of our friends in the uranium space said in the previous big dip, well, how hurt can you get jumping out of the basement window? Well, it turned out it wasn't the basement, and people did get hurt if they bought before things had bottomed. So maybe another way to look at this is if I had a 10-year horizon and I knew that I had the intestinal fortitude to ride out the ups and downs and just didn't care if the stock I bought today dropped 50% before it went on to be a triple or a 5-bagger. If I could do that, which personally I think I could, but as a newsletter writer with 30,000 people looking over my shoulder, I'm just not going there. But if I could do that, yeah, I might buy oil and copper today. But
well, you did.
Sorry, go ahead.
You did polish your crystal ball at the beginning, so I get to ask this question now. But when is the time to buy? Just a wild guess. Time frame, like I'm talking time frame. Like how long does it? We see all these headlines.
Buy one to just hold it up when I say things like this. Okay, I'll answer the question. I won't dodge it.
It's just a guess. Yeah.
I'm gonna stick with by the end of this year. I think the recession denial becomes untenable, and if they don't capitulate, then the reality would just be people stop believing them anyway. I do think we're at that rub point. The SOM rule was triggered. The Gundlach indicator was triggered months ago now, right? The cracks in the unemployment market, or sorry, the cracks in the labor market, which one jobs report doesn't make go away, right, are big and spreading. And by the way, even the mainstream types on Bloomberg point out that September is usually the most unreliable month for labor statistics, because it's when the US switches from the summertime economy to the fall, and teachers go back to work. There's a lot of changes going on in the US labor market in September. It's the end of the summer holiday travel season. There's a lot of changes there. And it's just one that has historically produced some of the biggest revisions. So this isn't tinfoil hat Lobo going on, right? This is Bloomberg's mainstream guys saying this. So in that context, for the cheerleaders on Wall Street to just say, "Oh, blowout jobs report, no landing, everything's fine," it just makes no sense. It is historically ignorant. I mean, I don't mean ancient history or Civil War era. I mean recent financial history, like now, this decade. It's ignorant to say something like that. It makes it easy to believe that there's a political motivation here in an election year. Of course, we'll never prove that. We'll never know that. I'm not saying that's a fact. I'm just saying, the irrational exuberance on one single data point it makes no sense.
I like how you called it the unemployment market. Hopefully that's not going to be true anytime soon, although it seems like it might, though. You're talking about tinfoil hats, so I got to ask about tin, which is again, kind of a fan favorite,
I
niche
like tin,
metal,
actually.
explosive.
Yes, it's actually a much more important metal than many people understand. It's not one of the most frequently discussed. It's also it's a smaller market, so it's prone to bigger moves. We've seen that in recent times. There was a tin surge. I don't remember the timing of it. And there were so few names that were easy, obvious go-to names in that space. They did very well. But, things come and go, tides rise and ebb. It's still an industrial metal. It's not incredibly rare. Maybe the high-grade deposits, that's true of any metal. But if there are sustained high prices, that's one that, like lithium or nickel, high prices will definitely cure high prices there.
Yeah, that's what we see.
So I like it. It's industrial metal coming out on the other side of the recession. It's one of those ones that, I'd have to look at the market then. I wouldn't want to call it now. But if during the downturn supply, doesn't anticipate the upturn, there could be interesting opportunities in tin. And I have had, unlike aluminum, I have had exposure to tin in my portfolio.
There are very few ways to get that exposure, so I suppose one could guess.
Few pure play ways. If you get a big mining company with a diversified miner, you could get some exposure there. But then you're also not going to get much upside. It's going to be such a small component of their overall value proposition that even if you get a big surge in tin, you're better off buying an ETF. I don't know if there is one, but if there was a tin ETF, I would buy that. As if I was a tin bull, I'd buy a tin ETF before I'd buy some major diversified miner that happens to have some tin in it.
Yeah, they should make a Sprott Physical Tin Trust, SPTT.
We should get a commission if they do implement that idea.
Yeah, we have it on screen, literally.
Tape.
So well, talking of physical trusts, I gotta ask: if we were talking 3 years ago at the same date, maybe 4 years ago, and you would tell me there's still a risk of a recession here, but there's one metal that could buck the trend, that would have been uranium, and you would have been right, and you were right, because that's what you were telling me back then. What about now? Uranium no longer seems a contrarian play. Would you agree? Where would you rate it?
Well, it's on an uptick again now, which is really interesting. And I've long said in this context, so long, like over the last year or two, that I like the two yellow metals as sort of a self-hedging component to my portfolio. If things get really bad, either the economy tanks, and you and I know that uranium is recession resistant. But when Wall Street pukes and everything turns red, the energy sector goes down with everything. And so you get a knee-jerk reaction. If spot doesn't move, which it might, but if spot doesn't move, the stocks will. So yeah, that makes it a little tricky. But you and I know that uranium is highly recession resistant. And I think I don't think I've published this chart on my free content. I need to extract it from the paid newsletter and publish this chart. But if you look at uranium over the last recessions, the last 4 recessions, uranium has been sideways to up in 3 of 4 of them. And the one it was down was 2008. And uranium had peaked in 2007, was already on its way down. So arguably had nothing to do with the recession. So I like uranium a lot. It's starting to pick up now. I'm not worried about it. If there is a recession, I think my stocks might take a hit briefly, but I'm not worried about the metal at all. And so if that happens, bear in mind that recession and stock market crash are not the same thing. They don't always go hand in hand. And the Fed has trained investors to see bad news as good news. So recession could actually be a reason for the markets in general and energy stocks and even even oil and gas to go up when they shouldn't. But uranium could do well in that environment. I don't know which way it's going to go. What I'm saying is I don't care. The fundamentals are so bullish. The trend is really interesting to me. It's upticking now, but what was most important to me is that spot uranium came down a long term. And that's where they go. The spot can fluctuate, above and below, but it tends to converge back to long term. And long term is on an upward trend. Spot corrected back to long term, and now it's going up again. All of this is very, very bullish to me. And I'm just not worried about the recession scenario. If there is a liquidity event in the stocks, I'll just buy more.
So what am I putting it right under copper, 8 or 9?
Oh, uranium? No, I think uranium is a 9.5 maybe or something, because
on the contrarian scale,
because it's already correct. I mean, we've gone from 106 down to, it ticked below 80. So, and the stocks have done better than one might think in a correction like that. But many of the better ones, they're not at 52-week highs anymore or all-time highs as many of them were. So there are, if not bargains, there are at least better value propositions on the table right now in a market that is rising right now.
Do you think they're ever going back to that kind of hype-induced all-time high that they had, in 2021 must have been like the winter of 2021 or something like that?
I do think uranium itself will go higher. And I do think there's potential for another flavor of the day type mania here, but we don't need it. As I said, I think to you before, the current spot price and this conversion with long-term is plenty for the better companies to make money. We don't actually need higher uranium money to make money on the right uranium stocks. If you build a uranium mine right now with uranium prices going sideways, you still see a PPSS benefit. Going from spending money on exploration to making money from mining is a value transition that the market recognizes. Or if you do make a new discovery, high grade discovery will matter in this market, whatever the prices do. But I do think supply remains constrained. I think there are plans to increase supply. Easier said than done. Just about everybody has run into trouble executing on that. Even the biggest uranium miner in the world has had a lot of trouble ramping up production and has cut its guidance for this year and next from original intentions. So all of this is very bullish. I'm just, the last stock I bought was a uranium stock.
But because that's what I was going to ask. It's like it is bullish. I've been asking that to everyone because most of us were wrong on this, but it is bullish for the metal. The metal is higher now than it was in 2021. The stocks are now, so are not. So is one's bullish for the metal going to be bullish for the stocks as well? And again, we're talking crystal ball things here.
So I got a little distracted, but what I'm saying is we don't need the metals to go higher to make money. I think we can make money even with the market remaining rational and just, staying at the incentive cost, maybe adjusted for inflation, right? There's money to be made doing that. But I do think with the supply constraints there, this was why I was talking about this. I think we're going to see fear, if not actual demand outstripping supply. And I think that we will see spot prices zoom ahead of long-term again. And I think that will create leverage to the upside in the right stocks. Now, that doesn't have to happen. If it doesn't happen, I still think we make money. But if it does happen, then I think we see more hockey sticks. And sorry, uranium bulls, will I be taking profits on that? You betcha.
Would you, let's be a little soft on your crystal ball here. I'm not going to ask you for an exact date, but what about a time frame? What if we're talking 5 years and the stocks are still not higher than that 2021? Are you going to be disappointed? Or are you going to have cut your
No,
losses?
I would say I would be wrong. If we go 5 years without seeing higher valuations in the stocks, then I'll be wrong. I don't think that happens. I think we see, absent a Chernobyl scale event, and I always put that caveat in there.
Yeah.
You know why? Absent something like that, I think we see triple digit uranium again next year, if not sooner. And I think that does wonders for our stocks.
So if we're talking 2026.
No, next year, 2025.
Yeah. But so if we're talking 2026 and we haven't seen that, better
then
times for stocks, then and you're cutting losses, that's what you're going to do.
Well, no, I use my upside maximizer strategy, and I've taken profit. I still have uranium stocks in my portfolio, but I think most of them I've taken profits on. I'm risk-free. I literally cannot lose money. So for me, it's not a question of taking losses. That's what disciplined, speculation, buy low, sell high as you climb the wall of worry, right? It's not about losing money. It's just about how much money will I make on this trade, at least for anybody who's followed me on this.
That's what I tell my wife when I go into pre-discovery companies that are sub 10 million market cap. I cannot lose money. Somehow I'm always wrong, or almost always wrong.
It's easier if you already have the money back in the bank, brother.
What are we now talking about? Rare earth elements. That's not something we talk too much about, but germanium, gallium had a very interesting year again. As China goes, so do they. Are you paying attention to them, or are they too complicated?
Complicated isn't the right word, but it is complicated. And, rare earths is a basket of 20 metals plus or minus. It's not one thing, as we talked about, like with the graphite and the size of the flakes and so on. So what, heavy rare earths you have, what light rare earths you have, what combination, the metallurgy is different for every deposit. There is no one size fits all off the shelf technology. It's always very complicated. I have seen rare earth projects with full financial, full feasibility studies, not a PEA, not a PFS, but a full feasibility study with robust margins go absolutely nowhere. People just didn't invest. The money wasn't available. They could not advance. It's a very tricky business. And critical point here, the prices are not really driven by pure market forces. They're driven by political edict out of China. If gallium goes up because China restricts exports, they can unrestrict that. And why would they do that if they're trying to put the squeeze on the West? Well, because if they make prices tank, they bankrupt the companies that went into gallium, right? Bankrupt them. And then you raise the prices again and you make more. We've seen this repeatedly. It's one of these wash, rinse, repeat kind of things where they jerk the market around. I've seen reports that they're doing this with lithium now. It's part of why it's so cheap. They're trying to run their competition out of the market. And then once they have control, once they have economic control, as they do with rare earths, then they can call the shots. So that's, if you can get on the right side, predict what the CCP is going to do here, then you can make a lot of money. But that's not my specialty. I'm a due diligence guy. I'm not a political handicapper. So it's a risky market. It's not something that I tell people they should avoid at all costs. It's just one that it's just not for me these days. Actually, back in my Casey research days, we did bet on one rare earth play, which, as I recall, was a 10-bagger. But we just got lucky. I didn't know that one was going to go. I didn't have any special sauce. I didn't know what the Chinese government was going to do. But I'm sure glad we took profits, because they did actually end up opening up and reducing the prices of those commodities after that. This was a long time ago. This was in the first big rare earth run up in the early mid to late aught. Yeah, this was like 2007. So late aughts. So I haven't gone back again since then because I just feel like, honestly, I don't know what's going to happen.
Hmm. What else are we not talking about? I know I almost have to let you go here because you're
Oh,
probably getting
sorry.
tired of
So
looking
on
at
your
it.
score,
Yeah.
I would say the either or here is not a, a 1 or a 2 versus a 9 or a 10. It's basically a 0 for me because I'm just not willing to go there. If I was, then for the right rare earths, their applications are so niche and they can't be replaced. If you get the right rare earth deposit in the right place, maybe one that China doesn't have such a stranglehold on, I do think there's good money to be made there.
Well, on the topic of niche, what else? Antimony, tungsten, something weird that I haven't heard about? Something else?
Yeah, I'm just generically not interested in those kind of really small niche markets. Every year, there's somebody who comes to me with some sales pitch for why tungsten is going to go through the roof. I remember there was one of these Star Wars arguments of how you could drop tungsten from orbit, from low Earth orbit. It would basically a tungsten arrow, the size of a phone pole. So the thing weighs a couple tons, and it's so heavy. Tungsten's very heavy, right? So it's so heavy that it picks up so much kinetic energy that when it hits, it delivers the energy impact of a nuclear weapon. But since it's just tungsten, there's no radiation, there's no fallout. It's just a big earth-shattering kaboom. So, it's a really interesting argument. It was fun to research and read about. But guess what? As far as I know, there's no phone pole-sized tungsten arrows orbiting the Earth. I sure hope there aren't. But it'd be better than nukes, I suppose. But anyway, the point is that it's an interesting story, it's exciting, and it's such a tiny little market that this military application, had it happened, would have blown it out of the water. It didn't happen, and I see this kind of thing all the time. You mentioned antimony; it's a critical mineral and so on, but it's not rare. And sure, one new source of demand for any one of these oddball, tiny little niche markets can send prices through the roof. And we've seen that before. But one new source of supply, because it's such a market, can send them right back down again, can just tank that market. And you never know. China may have some giant high-grade tungsten deposit that they're just sitting on because the market doesn't justify putting it in production. But you get something like that event, and then suddenly this new thing happens. So it's hard to predict. If I had a crystal ball and I knew which XYZ tiny metal was going to go through the roof, sure, I'd bet on that. And I would take profits right away, right? Or I'd put an upside maximizer on it. I would make sure I couldn't lose money on that. After the fact, like when everybody's talking about it, oh yeah, this tiny little metal, it's gone up 20x this year. I think that's too late. At that point, high prices cure high prices, and you need to really worry about that.
And somehow it always comes unexpectedly, even though everyone always says high prices cure high prices. And somehow it's for almost everybody out there.
By that.
Yeah.
We go out in the rain and we get wet and it surprises us. That's Mr. Market.
Exactly. How's you talk about making money? How's your portfolio been doing so far? Is that something you track? Like, do you track your CAGR? What do you think you're going to close the year on the newsletter portfolio?
Yeah, we do have an annual report card. If you search on the website, I think report card, you'll find that it's a free publication.
Check.
I was in the red late 2022 in my current portfolio. I'm up 34% now on my current portfolio. And that includes a lot of things besides gold. So, and I'm stressing current portfolio because I think these yearly report cards, I do it because people keep asking, but I actually think that's the wrong way to look at it. Nobody goes and sells their entire portfolio on December 31st and buys the whole thing on January 1st. Nobody low and you sell high at whatever year. So this way of looking at an annual report card, I think, is very artificial. And I'm not just saying that to excuse underperformance. I beat the comparisons most years, but that's just not how I look at it. On my website, there's a track record link on the bottom of every page. There's a track record link, and that shows all completed trades. No cherry picking, no arbitrary. This was a good year. It's I bought the stock, I sold the stock, this is what I paid, here's the fees. There are screenshots of the brokerage orders, the confirms from the brokerage. You can see exactly what I did. And it's not theoretical. It's not a model portfolio. Those are actual trades. I just think that's a much more realistic answer. And so the answer right now for that is I think the average trade is around 55%.
Well, I'm an accountant by education, and so I went to school with a bunch of accountants. And last time I saw a guy I went to school with, he was like, "Oh, what are you doing?" We started talking about investments. He's like, "What's your CAGR?" And I'm like, "I don't really track CAGR like I track where I started or like where we last time when we spoke or where I am now." And he's like, "What do you mean you don't track CAGR?" And so to accountants, that's not something that is within the realm of understandable.
But in the real world, what I want to know is, am I making money? Right. So I want to look at my trades. How have my trades worked out? I just think that's a logical and defensible way to do it.
Yeah. And it says in 2023 on the report card, I've pulled it up here. I'll put it on the screen now for people to see, but it's, you see, I currently have an average gain of almost 55% on all completed trades. So good on you for that. But I don't want to hold you for too long, though. Thank you so much for going through not going through me happily, but going through this with me here, Lobo. This was actually very helpful. I think people are going to find the same thing, and you can look at the comments to figure that out. But I'll let you drop off now, as I have CEOs to grill. Well, only one CEO this week, but not before my favorite part of each episode, and that is, of course, the disclaimer, right after which I'll jump over to the CEO barbecue portion of this episode. But there's a warning on your screen right now for everyone listening. Go and look at that. You're obligated to read it, so you have to pause the screen and read it. But you're better off reading it, just even if you weren't obligated, because this is not just some disclaimer. It's an actual warning that will help you not lose money, which, by the way, is the norm and should be the expectation in this sector. Money is part of it too. I am here to make money. I make money from the existence of this channel and specifically from companies paying for the production of these interviews. Now, in this episode, the company you're about to hear from, Minaurum, has not paid for the production of their interview. That does not mean that there's not going to be future interviews with them that they potentially could pay or other conflicts of interest, if you will. Okay, so this doesn't mean the fact that they haven't paid for me to produce this interview doesn't mean you should look at this episode any different, because even companies that are not paying are still likely seeing their participation in our program as a chance to do some marketing. So start by understanding that, and just understand that most company communication online, albeit this interview or their presentation, their website, their Twitter account, when you call up the phone number, whatever, all of this, those are marketing tools. It is marketing. Every company, every public company communication out there should be treated as marketing. And although I do not make buy or sell recommendations, because I think there's a clear conflict of interest with the type of business I'm in, many out there will still do. And many out there will take money from the company and then turn around and tell you that you should buy that stock. And so you should be aware of that inherent bias, that there's a clear bias there. Unfortunately, that bias is not always going to be clearly disclosed with everyone out there. So it is safer for you, anytime you're consuming any type of company-specific content, just approach it with a dose of skepticism, treat it as marketing, and maybe even consider, crazy thought, using your own brain and doing your own research, carrying your own responsibility. Because unfortunately, I'm not a magician. The guests here are not sidekicks. Lobo was great. Lobo Tiggre knows his stuff, but he's not a sidekick. And some of the CEOs are even normal people that we interview on this channel. So we don't possess any superior knowledge about what's going to go up, what's going to go down, or what's going to go in circles. Also, unfortunately, try as I may, I'm not going to be perfect. And you shouldn't tell my wife that. But I'm not always going to catch all red flags or challenges with the companies or else shenanigans or whatever else it might be. Yes, this is the CEO barbecue. It is intended to, quote unquote, grill the CEO and ask them tough questions, ask them the questions that nobody out there is asking. But I am still not experienced enough to be relied on. So please, this is all to say you shouldn't blindly trust me or anybody on the internet, and you should do your own research always. If you don't understand it, don't do it. That's what Charlie Munger used to say, and I think it's a great saying. In addition, no guarantees are going to be made here besides one. That guarantee is that there will be forward-looking statements, of course, in these conversations. Those are conversations that are genuine and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of the companies and the guests and the hosts' controls. So be aware of that. Be aware of the inherent risk to investing. Investing is risky. You can lose all of your money, and the increased risk of investing in the mining space. And just please talk to someone who's proven to know what they're doing and talking about, like a professional investment advisor, a licensed professional investment advisor, because none of us are. As well as, of course, I'm going to hammer that home, do more research before taking any decisions. Research is done on setterplus.ca. That's where you're going to find the company's official filings. That's where you're going to find their financial statements, their management discussion and analyses. And that's where you're going to find their management information circular. If you're curious about how much money they're making, if the companies are making, if the CEOs are making too much money, that's where you find it, the management information circular. And if there's a technical document on there, an NI 43-101 or whatever, please read it. Just read it. Just go through it as if you're reading a book. You're not going to understand everything, but just go through it. You're going to understand more than you think, and you're going to know and have learned more about the industry at the end of that document. I promise you that, because even I could do it. So if you don't do that, you're highly likely to lose your money. There are disclaimers on your screen right now. Again, if you don't enjoy losing money, read them and be careful out there. With all that said, though, I'm going to kick off the CEO barbecue portion of this episode by traveling to Mexico, but not for tacos and endless beaches, unfortunately, because I'll be looking for precious and base metals in both northern and southern Mexico. But as always, I won't be doing any of that alone, as I'll be joined by Darrow Rader, the CEO of Minaurum Gold, an exploration company listed as MMRGF on the OTCQX in the US, and also MGG on the TSX Ventures Exchange in Canada, where an average of about 400,000 shares trade each day. And I also see a 52-week high of 34 cents and a 52-week low of 11 cents. Now, close to 400 million shares outstanding, and with today's $103 million market cap, that means MGG is trading at about 26 cents per share. In addition to the 395 million, actually, to be specific, shares outstanding, there are 16 million warrants, some of which in the money already, and there are close to 16 million options, also some of which in the money, leaving the number of fully diluted shares at close to 430 million. Management here owns about 5% of the company. Institutional investors own 15%. 60% is recorded as high net worth individuals, which leaves about 20% in the hands of retail. The last officially filed financial statement on setterplus.ca, which shows me the numbers as of July 31st, 2024, had close to $5 million in current assets on it, most of which at the time, specifically $4.5 million, was cash. And of course, there's a small portion of account receivables, prepaid expenses, and even some marketable securities on there, though those are currently relatively small amounts, so I'm not going to go through them. Total liabilities sat at just about $320,000, about halfway split between current and non-current liabilities, with the current being account payables and accrued liabilities, although again, rather small amounts and thus no major long-term debt either. In terms of exploration expenses or operating expenses, the 3-month period that ended on July 31st this year costed Minaurum, and that is excluding share-based compensation, just over $250,000, which is an average of about $90,000 per month on what I would call administrative expenses. The largest element of that spent was consulting fees, director fees, and professional fees, which combined represented about 50% of the total administrative spend. Investor relations and marketing was about 15% of that spend, and another roughly 15% was office and administrative expenses, with various smaller expenses making the rest. As to the exploration expenditures, so exploration and evaluation, of course, they show about $820,000 for that same period, which is an average of $275,000 per month. So in summary, $90,000 a month went to administrative costs, 275 went into the ground, leaving us with an exploration to administration ratio of about 3-1, meaning about 75% of the money went into exploration and evaluation, and a rough 25% went into administration. As always, though, please understand that this financial statement is nothing more than a snapshot in time. In this case, it was specifically at the end of July of this year, but that really simply shows you what the finances looked like on that exact date and nothing more. Finances, though, are a fluid thing, and math could be hard, if you're me at least, so I could be making mistakes in my reading of them. It is imperative for you that by the time you're watching this video, you visit the company's website, as well as setterplus.ca, to look at the most up-to-date numbers yourself. Make sure you're getting the full picture. For Minaurum, that full picture is mostly focused on Mexico. And I say mostly, that's going to get interesting in a couple of minutes. But the company has an almost 68,000 hectare portfolio, again, split between the north and the south of the country, with the focus currently being on the north, on what they call the Alamos project, which apparently is the only new silver discovery in Mexico that's already permitted. This historically producing district is known for its high-grade, low-sulfidation epithermal silver gold systems, and that's no different with this company, where the average grade of the last 103 holes was 315 grams per ton silver. The last news release from this project dates back to September 19, so it is very recent, and a headline says that the company drilled close to 2.5 kilograms of silver per ton. So that's almost 2,500 grams of silver per ton, although notably it was over very narrow intercept. It's just about 70 centimeters, or 0.7 meters, that is. While the average width of the veins that contained that average 315 grams that I told you about earlier is actually about 2 meters, 70 to 90% of which is or was true width. This currently ongoing 8,000 meter drill program, by the way, is part of the resource drilling program. So we're both infill and step out drilling is currently ongoing on one of the 3 targets for this year. And there's an NI 43-101 compliant mineral resource that's expected by the end of this year. At the beginning, I also mentioned that there is zinc and lead involved in the system too. And if you know, it's a silver system that has zinc and lead showing up. And if I also told you that Dr. Peter McGaw was involved in this company from the beginning, then you'd probably already be guessing that there is CRD potential in this one as well. And so relogging historic core at one of the 3 main zones of the Alamos project came back outlining a continuous, almost 2.5 kilometer long zone of zinc-rich CRD style mineralization and skarn alteration, with the strongest CRD drill holes to date showing 3 meters of 3.2% zinc and 1% lead, and close to 8 meters of 2.2% zinc and 0.6% lead. Next to that drilling work, Minaurum is also in the process of getting additional water and surface rights, and maybe potentially expanding the foothold, which is something Daryl and I will talk about later on. Now, the Alamos project is not the only one the company currently has in its portfolio. There are 2 more in the same state, that being the Orifiero and the Adelita. And in the south of the country, then there's also a couple of ones there. There's Santa Marta, Orena, there's Taviche, and there's Biriku. I'm probably not saying that right, but there you can correct me later. One of those 6 additional projects, so the Santa Marta specifically, is the one the company has also made some moves on, although it is early stage and drill permits are still pending here. This is a copper gold VMS target, which again, we don't know too much about right now, but I'll be asking about it later on in the conversation. As far as I understand it, the other 5 remaining projects are going to be either spun out or monetized. But again, more on that later on, as Dara and I will be talking. Additionally, just a few weeks ago, Minaurum signed an agreement to buy an initial 25%, as well as the option to acquire 100% in another CRD project that's located in Nevada, specifically in the Battle Mountain Eureka Trend. And this project is a brownfields project, so it's got a lot of historic work done on it. There's even a historic PEA on it showing 3.2 million tons of over 7.5% zinc, as well as some lead for a contained 543 million pounds of zinc equivalent. But Minaurum believes there is more upside potential. And again, more on that later on in the conversation. And this has not actually yet become a conversation, but I can imagine you can't wait for me to shut up already, Darrow. So I'll go ahead and at least try to do that. But it is your first time on the CEO Barbecue, so obligatory questions are in order. First, who are you and why should I trust you with my money?
Well, thanks for having me, Antonio. So I've been working in Mexico for almost 25 years. I was part of a group that put together a company called Impact Silver. We also were running a company called Energold Drilling down in Mexico, and subsequently also formed a company called Defiance Silver a few years back. So I'm a silver bull. I've worked a lot with people like Peter McGaw, who was the co-founder of Minaurum Gold, and I love Mexico. I love the jurisdiction. That covers sort of everything from geologic potential to the cost of doing business there, everything from drilling, geological, mining, construction. I think it's a very competitive place to work. And I have a finance background, but I've been involved in numerous mines being put into production down in Mexico. So we see Minaurum as sort of our next discovery that we'd like to transition to production ultimately, and we're well on the path to doing that now.
Well, part of me being able to trust you with my money is you doing that with yours, of course. And insider ownership for Minaurum is not terribly high. It's at 5%. How much of that is you personally? And what would you say is your average cost of capital?
Um, I have a couple of million shares that I've had from probably right at the beginning, about 12, 13 years ago. The average cost of that would have been in the 30, 35 cent range. So I'm a little underwater on that. We did have larger ownership from the management team. Unfortunately, our co-founder, David Jones, who you may see on our website, he was sort of Mr. Guerrero Gold Belt. He passed away a couple of years ago, and he was actually our largest individual shareholder on the management side. So those shares, of course, have disappeared. Um, but along with that, I have a good options package at about 5 million options. But to be honest, my greatest motivator is all the people, friends, longtime investors that I brought into the company and into the story.
That's exactly where I was actually going with this, Daryl. But it's basically me trying to understand how important is this investment to you? How hard are you going to work to? It might sound a bit weird, but how hard are you going to work for the stock price to go up? Because that if I stepped in today, that's how I'm going to make money. So again, talk to me about how important this investment is to you, and maybe what percentage of your portfolio have you invested in this company?
Yeah, so we started Minaurum about 13 years ago. I've been in the industry 25 years. Over the 25 years, I've been involved with four companies. As I mentioned, Energold Drilling, Impact Silver, Defiance, that I started and sort of helped run alongside Minaurum in the early years. So I don't jump around very often. I have never consolidated a company that I've been involved in. I have done a stock split on a company I've been involved in. I defined Silver in its early years. So my thing has been I'd like to see the entire business strategy through from beginning to end. I realize exploration is a business where the odds of actually having a success are pretty low. The odds of actually finding a mine and building one is very low. So when we put Minaurum together, the reason I jumped ship from Impact into Minaurum was that we saw with Minaurum we had ways of de-risking the company, i.e., by getting guys like Peter McGaw involved, getting David Jones, who is gone now, but getting him involved. They helped attract projects to the company. They lowered our risk profile by having very good geologists on the ground and helping us target. And so we've seen Minaurum, it's been around for 13 years, but to be quite honest, there were a lot of down years in that period, especially 2012 to 2016, where we weren't as busy as we would have liked to be, as the whole industry was. But since then, we got involved in the Alamos project. We made the discovery there. We permitted production, and we want to see it through to the finish. And that's one motivation for me. But the biggest remains a lot of the investors, newsletter writers in Minaurum have been following me from other companies. I want to see them made right. And I believe that as we now, as you mentioned earlier in this interview, as we're moving towards our maiden resource, I believe that there is a re-rating potential when we get that initial resource out. And that's where I believe, we can start showing the shareholders a significant return from today's prices and then moving forward as we get subsequent resources out.
And that's something
updates, I should say.
that's something we're definitely going to talk about later on in the conversation. What you mentioned you've been involved in a couple of other companies. Do you still hold other positions in other companies, sort of on the management or board level or something else?
No, I'm just a director and CEO of Minaurum. I have no other involvement with any other public companies.
What about portfolio wise? Do you typically invest your own money? Because you said you're a silver bull, so do you typically take positions in other companies as well? Or is your company kind of the cornerstone?
No, I do love silver, and I probably have too much in my portfolio in silver, probably about 80% of it. But I've been through a couple big silver runs back between 2002 to 2007. Everything I had with silver went up 500 to 1,000%. Back in 2009 to 2011 saw a similar run. Back in 2016, you may remember that there was a silver run for about 7 months in 2016 where all my silver stocks went up 3, 4, 500% in a matter of months. And that's kind of addictive, to be honest. I do hold gold stocks as well, but I sort of try to diversify silver, having a little bit in the US, some in South America, some in Mexico, just to sort of give myself a bit of a jurisdictional kind of insurance with my investments in the silver space.
That's big leverage, 80%. I think I'd be sleeping on the couch if I had that exposure to silver with that leverage. Just one more question on my smell test here, what I call my smell test royalties. Do you or any of the other team members personally own any royalties on any of the projects you're involved in now?
No, we don't.
Okay, good. I like it simple that way. Let's talk about how you plan to make yourself, and if I choose to become a shareholder, me some money in that process. This is where I typically ask you for your main unanswered question. But as of a couple of weeks ago now, I guess the number of unanswered questions for Minaurum has grown with the acquisition of, as I mentioned, a quarter of a CRD project in Nevada. Is this a focus switch for the company out of Mexico and into Nevada, or is this or is the focus still on that coming up with that MRE in Mexico?
Yeah, the focus remains Mexico. I see our involvement in the United States more as an insurance policy. There's been a lot of rhetoric out of Mexico. One of the big reasons that we're fully permitted on the production side is because we've built mines before in Mexico and in South America, and we know that one of the key things is to de-risk yourself as much as possible as you develop the asset. And we saw the Lone Mountain opportunity as a distressed opportunity. It came via one of our directors to our attention. Peter McGaw was very familiar with the district. This is right in the vicinity of Ruby Hill, I-80's deposit that they're building a mine at. Peter McGaw is basically the professor of CRDs for the I-80 team. So this was a, to be honest, dirt cheap opportunity to get an insurance policy with a brownfields asset that had 15 million spent on it. And we're basically, when we do exercise the option, we're acquiring it for about $1 million in stock and a couple $100,000 in cash. But this remains the kind of asset where I would say we'd like to see about 90% of our cash in Mexico, and then the treasury going into Alamos, getting its resource out, getting a subsequent resource, moving it to PEA. 5% of our treasury, yeah, we'd like to start doing a bit of work at Lone Mountain and just adding some value there.
So that's what we're going to be focusing on, and specifically that MRE, or your expectation for an MRE this year. That's still there. That's still a plan. You want to have a maiden resource by the end of this quarter, so basically this year.
Yeah, we're aiming for early December. If there's going to be a week or two kind of delay, which is tough in Mexico at times because they have big holidays, especially around Christmas, then we may move it to early January. But the idea is we're working with IMC consultants and arm's length group of Tucson. They're doing the resource calculation, and we're all working towards that early December timeline right now.
So you have the money to finish that, as far as I understand it, by looking at some of the numbers. You have the permits, you have the plan, you're doing everything. What do you think is the biggest challenge between now and you coming up with that resource?
The biggest challenge always when you're calculating a resource is you naturally have in-house studies that your own geologists have prepared, giving you a bit of an idea or ballpark of what kind of a resource you'd be looking at before you engage outside consultants. So that's always the biggest thing that sort of keeps me up at night is, okay, I see the drill results coming in. To be honest, the drill results thus far, and we have a lot more coming here over the next 6 weeks. They've been beyond expectations, but until you see the actual numbers from IMC, you're always kind of like, are they going to be, close to what we've internally been forecasting? Are they going to be different? There's when you deal with resource studies 43-101, you're not interfering in the process. It's up to the independents to come to their own conclusions.
You say the expectations have been beyond what you had. Do you think the width of the veins would increase in the MRE too? Like, is there a portion of the project where that veins swell more, or do you expect the average to still be around that 2 meter mark?
So that 2 meter is an average drill intercept of every vein that we drilled over 100 holes. So these systems, this is a low sulfidation epithermal vein. It pinches and swells. The pinches, I would say, are actually exceeding expectations right now. As you mentioned, our last news release, 0.7, 0.8 meters of multiple kilos. That's in a pinch of a vein. The swells you're typically going to see going anywhere from 5, 10, maybe up to 20-meter widths. And that's where you start adding ounces, of course, in that. So, for instance, we're drilling two areas, Europa Guadalupe, Promontorio. Promontorio is a historical producer. We have proven that it continues at depth. We've proven through drilling that there's, neighboring vein systems that have not been mined. They're left intact. But from that mine, historically, I would say the average stope was probably in the 7, 8 meter width range. But that being said, we have drill results such as, I believe it's hole 3, it may be hole 2, that we had drilled into an area of old workings. We didn't know at the time that there were old workings there. And we ended up drilling 20 meters of left behind mineralization in the old workings. And that was, virgin material in the vein, in the hanging wall. And the average grade silver equivalent was about 450 grams per ton over that 20 meters. So we know that when these shoots occur, they're big, they're wide, and they continue usually at least a couple hundred meters top to bottom in height.
What would you say that range is? Well, you say a couple of meters. So is it just 0.7 would be on the lower end, then I assume where the veins are pitching. What about on the wider end? Where are you going to get it? And then, I mean, I suppose the most important, what is the average width going to be?
Ultimately, as you probably know, in Mexico, the current average underground mining grade in Mexico from oil companies is about 150 grams per ton silver. Typically, to get a jumbo in, you have to expand the opening to about 2.5 meters by 2.5 meters. So if it's a 70 centimeter vein, you're going to dilute it by a factor of 3 or more to be able to get it to a proper mining width. So that for us, even if you divide it by 3, it's still a high enough grade that you're going to make money on it ultimately. But that's, you're moving along those pinches to go to the next swell where you can then make the serious money and where you have the considerable amount of ounces. What we're looking for in a swell, and what we've seen historically, according to reports and according to our drill results and some of the historical drill results, is typically a swell, as I said, can be anywhere up to 10 meters. There's usually a core portion of it, maybe 3 to 4 meters. That's multi-kilo per ton, maybe 2,000 grams per ton silver. And then you get a bit of a halo around that of the other, say, 7 meters that are typically, maybe 300, 250 grams silver, but then you start getting pretty high base metals in that as well. The one thing I should point out in this project, and you mentioned earlier on metallurgical results, is that we are directly south of Mexico's third largest open pit copper mine, the Piedras Verdes mine, that's owned by the Salinas Price family, privately owned in Mexico, big mine. In all likelihood, our vein system is plumbed by a copper porphyry. We see evidence of that on topographical lows a bit in the southern portion of the Alamos project. But where we are, our silver mineral is called stromayerite, which is a copper silver sulfide. So every time we're seeing kilo plus silver, we're seeing multi% copper, and you're seeing at least a couple percent zinc and lead. And as we start to drill lower now, you'll see in upcoming news releases, the gold grade starts to go from kind of anomalous half-gram numbers into 4 or 5 gram type numbers. So it's a polymetallic system. It has been produced as a polymetallic system for hundreds of years. We have 2 separate copper smelters, the ruins of them on site. So we know that they were, this entire camp had over 200 million ounces of silver mined out of it historically. We have no idea how many base metals, but we do know that there's 2 copper smelters. So they were producing a lot of copper in the day as well, the day being 150 years ago.
What's that alteration that those higher grades are associated with? I mean, and why I'm really asking is because main thing that I'm thinking in these type of systems is clay alteration. Like that's something I'm always looking out for. Are you dealing with clay alteration here?
No. What we're dealing with, what we're finding the highest grades in is basically altered limestone. And obviously limestone acts as a sponge, absorbs all these fluids when they come up. We have talked a bit about Alamos having CRD potential because we see that. But I would say probably over the next year, especially moving into the PEA, that's going to be fleshed out a lot more because I think we're getting an understanding that CRDs had probably a much larger role to play than we thought initially in the project, in the genesis of the mineralization. Um, our our news release that we put out, as I think you said, September 19th, that didn't talk too much about CRD, but our next two will, because we are seeing a lot more CRD alteration, CRD base metal mineralization. But that's still sort of a work in progress. And this is surrounded by granodiorite, things of that nature. But it's really the margin we're starting to find is that kind of limestone, and it just sucked up all the liquids, and that's running concurrent or alongside where the major epithermal veins in this camp have been formed.
I do want to touch upon the CRD potential here as well in a second, because it yeah, I mean, the formation generally seems interesting to me, also because low sulfidation epithermal systems, which what you're drilling in right now, they're often associated with multiple mineralization phases. Is that the case for you? Are you seeing overprinting or secondary mineralization, or what is that there?
Yeah, definitely. If you take a look at our presentation or any of our drill results, you'll see they're polymetallic through and through. And that polymetallic reflects, we've had estimates anywhere from 3 to 5 separate pulses of mineralization or pulses of fluids that came up in the main system. And of course, as those fluids come up, they typically expand the system. They typically push the widths a bit bigger, but they give you that overprint of why we can see high-grade silver along with high-grade copper and at depth now high-grade gold all existing at the same level. And that overprint, that those multiple pulses of fluids mineralization coming up, we see that universally throughout the project. I don't think we've seen, well, I should say there's one target in the northern part of the project that we haven't done too much drilling at, Minas Nuevas. It has a historical resource of about 15 million ounces, grading 300 grams per ton silver. We haven't classified that yet. We're probably going to do that in the next phase of resource drilling in the spring. That's very high up in the system, topographically and geologically speaking. So there, the mineralization seemed almost pure silver there. So maybe at depth it could become polymetallic, but literally everything else, once you move a few kilometers down, you're looking at probably a 5 to 7,000 hectare area with over 26 veins. They're all polymetallic. The caveat being polymetallic, they are still about 60% pure silver, but then the 40% on top of that is everything from gold, silver, lead, and copper.
How close are those veins to each other? Like, is there ever going to be a possibility to mine them together or something like that?
That would be the goal. That would be the goal. So we have about 38,000 hectares at Alamos. The historical camp had 200 million ounces mined out of 4 separate mines. All those 4 separate mines exist in about a 4,500 hectare area. We have production permitted for underground mining purposes about 4,000 hectares of that area. So virtually all of our drilling has occurred in that 4,000 hectares, virtually all being probably 85% of our drilling to date. So all these veins that we are discovering, the 26 are located in that permitted area. So ultimately, these are underground type targets. What we ultimately envision here is over the next couple months to get our maiden resource. It's just taking 2 vein targets, drilling them off to initial resource. Then we'd like to spend the next 6 months taking another 2 or 3 and drilling them off to a resource and expanding the original one. So ultimately, this is going to be the kind of camp that has 7 or 8 different vein targets that each maybe host anywhere from 15 to 25 million ounces. And it becomes kind of a, what would I call it? Some people call it wagon wheel. You put a mill in the center and do satellite deposits. I don't know how it'll be developed ultimately, but what we do know is it's going to add up to a lot of ounces, and it's going to be in a relatively small area of maybe 3,000, 3,500 hectares.
Multiple pulses of mineralization, though, could also result in zonation of the grades, which I suppose is almost inevitable in your case. How are you going to manage grade continuity when planning for eventually, well, first of all, obviously this initial MRE, but also down the road when you want to go to M&I resources eventually? How are you going to deal with the grade continuity here?
So grade continuity here historically has I would say there's two sides. There's a good side and a more difficult side. And where the good side is great continuity historically, because there's been 200 million ounces mined out of it. We have a very good idea of what these old mines look like, how the deposits look underground. We've done underground rehab. They're continuous. They are strongly mineralized. The one thing they're not is they're actually not really big dimension wise. So where the difficult side of it comes to is when we came into the project, we virtually ignored the historical. We took sort of, as Peter would say, Peter McGaw, we put a mag silver hat on and we just drilled all over looking for stuff that the old timers missed. We ignored the existing stuff. And we made a discovery at Europa Guadalupe. We made some other discoveries. And then we started over the last 3 years sort of looking inward and starting to drill off areas of known mineralization, areas that had seen historical mining. One of the difficulties we did is because we were so aggressive on the drill bit, most of our drill hole spacing was anywhere from 300 to 500 meters apart. And when we hit, we thought, okay, well, let's step out another 500 meters to see how big this can potentially be. But one thing we did realize is when you look at the mines historically, and we're still getting old data as we speak, the mines historically were not very big dimension wise. For instance, Quintera, it was the original big mine here. We know that historically they paid taxes, so probably smaller than, the numbers are smaller than reported as far as production goes, but they paid taxes on 100 million ounces of production at Quintera. Quintera, when you stand on the mine, is about 200 meters long by, let's say, about 10 meters wide and goes to 500 meters in depth. So speaking of a major silver deposit, let's say it's 100 million plus plus, that's not actually a big footprint. It shows great continuity, spectacularly high grades. But if you're doing 200-meter step outs, there's a chance you actually jump over one. So our challenge is now doing more infill. And infill, we're not the typical junior where our infill is, well, we're taking it from 50 meters to 25 meters. We're taking it from 300 meters to 100 meters and then, breaking even down smaller than that. And what we're starting to see, as I mentioned, we're starting to see that at least at Promontoria, where we're doing a resource calculation, the grades are starting to exceed our expectations, partly because we're just not doing these crazy step outs that we did for the last 7 years. We're now honing in on the mineralization, and you're starting to see the grade go up commensurately. So that's sort of a long-winded answer to your question, but challenge is they're not very big, but they're spectacularly high grade. And that's a good and bad thing, because good, when you're producing, you want that spectacularly high grade system because it's going to keep your underground mining costs to a minimum. Once you're on them, you just follow them and they have good continuity.
Has your understanding of the structural complexities of the region improved though while you're doing these big step outs, or do you still not feel completely certain on the on what's driving the mineralization here?
It has gotten a lot better. It's still not perfect yet as far as targeting goes. But one of the things we discovered is the presence of cross-cutting structures. The difficulty being these cross-cutting structures, or in many cases veins, do not appear on surface. So what we're seeing is we have all these 26 veins, and there's more than that. We call them veins, but they're actually vein zones. So Promontorio itself has 3 separate veins that are 10, 12 meters apart from each other. These zones run in a very distinct sort of northeast-southwest pattern or direction. Now, what we're starting to discover is that there's high-grade lead veins that are bisecting them at depth. And typically when these veins bisected at depth, that's where you're starting to see these silver shoots occur, which is pretty, that's pretty normal for epithermals in Mexico. You have your vein trucking like that, you get that, it opens up, the fluids come up, forming a deposit. Our difficulty has been thus far is those high-grade lead veins are not on surface, they are at depth, but as we drill these chutes out now for our resource, we're obviously hitting those lead veins as well. So part of the challenge will be to find a way to better forecast or predict where those bisecting veins form. Thankfully, on a lot of the project, you can actually see these sort of vein blowouts that you would typically see at the top of a structure. You'll see them on surface. So that gives you a bit of an idea. And I can think of at least 4 of them offhand, 2 of them that we're moving to a resource now. But there's ultimately going to be a lot of them that don't come to surface, and it may be a situation where we get our resource out, do some basic engineering studies, and then maybe that'll give us a bit of an idea or a base sort of line to use for maybe doing some geotechnical work. Maybe some surveys would help, find lookalike targets that are buried elsewhere on the vein systems. But the vein systems, we know them. They're multi-kilometers long. You can see where they bulge out on surface a bit, but there's obviously areas that are covered that maybe it's some kind of a VTEM, aeromag, something like that could help.
So that's essentially what's going to help you to better understand what's happening underground from a faulting perspective, for example, just so you know how predictable it could be, then I assume.
Yeah,
okay,
that's correct.
When did you get this project in? Because the company's been, you started the company about 13 years ago. When did you get this project?
So this project we acquired in 2016. We acquired an option on it. This was a project that I have driven by for probably 15 years before I ever got involved with it, because I was always told, I'm not a geologist, I have a finance background, and I was always told by my geologist, oh no, that's a great historical area, but it's mined out and it's a mess of claims. And Peter McGaw had the same experience, drove by it for dozens of years. One of Peter McGaw's partners at Imdex, his consulting group in Mexico, actually did his I believe his master's thesis on the Alamos district. But the problem with the district was it was one of the highest grade, larger producers in Mexican history. It was so pure that the only other mint outside of Mexico City ended up being built in the town of Alamos. But what had happened was the entire project, until about 15 years ago, looked like a jigsaw puzzle. There were probably 20 separate landowners. It had not been operated as a mine since prior to the Mexican Revolution. And it took a family called the Legarda family out of Sonora. They saw this project. They are an infrastructure family. They build everything from highways to now mines. Now they build mines. They own drilling companies. And they picked up this project almost the same time they picked up a project called Santa Elena. Santa Elena, of course, they spun off, or they optioned off to Eric Fear and Silvercrest #1. Now it's the First Majestic Mine. This project was acquired almost at the same time, but it took years of permitting and acquiring all these jigsaw little pieces of claims to put it into a cohesive package. And once they did, they're good families. So the Fear family, they took it to Silvercrest #2 after the First Majestic spin out occurred. And what had happened was that was just the time, if you remember 2016, that the CEO of Silvercrest had some health issues. He had to resign temporarily. So the Legarda family, who I knew back from the drilling days, they came to me and said, we like working with you, Daryl. We love Peter McGaw. We were going to do a deal with Silvercrest, but we don't know what's going to happen there now health-wise. So are you guys interested? And we jumped on it right away. And this is one of the reasons that the project is so advanced on the non-technical side, on the permitting, community relations. The Legarda family are, I'd say, the best permitting group that I've ever worked with in Mexico. They have great connections. They are the family that has done the drilling, built the mine, and done all the permitting at Las Chispas for Silvercrest #2. They're the group that's now doing all the drilling for Vizsla Silver. They have contracts with the Mexican military. They're all over the place, and they have just a great line of connections. So for us, every time we're working on something, we mentioned in the summer that we're looking at water, explosives. We're looking at de-risking this project as far as we can. And a lot of that comes from having this family that's well connected, that's, doing water and blasting permits at Las Chispas, doing it at other mines. They look at this and say, well, they have a good share position in Minaurum, but their big thing is a royalty on the Alamos project. So they want to be involved and see this come to fruition. And they've been really spearheading the non-technical side, the permitting, community relations work for us.
That's where I wanted to go with this, because you say this project is so advanced from a non-technical perspective. But again, you've had it since 2016. So it's almost 8 years now, 42,000 meters of drilling. About to be 50,000 meters, and no MRE on it. How come?
Basically, it was due to the way we drilled. As I said, we did such big step outs because this is a new district. We don't have big 43-101 deposits next door, except for Piedras Verdes, which is more of an open pit copper silver mine. We're going to have to get drill hole spacing probably down to about 75 meters for this resource calculation. So that's what we're doing. But a lot of these areas, we're talking 300-meter apart holes that we now have to shrink into 75-meter sort of cubes as you're drilling it off. So it takes us a lot of time and money and extra meters to get to the resource. But at the same time, it's raising the grade as we drill, because now we're not doing these wild step outs. We're actually honing in on the mineralization, and we're seeing a commensurate increase in the grade of the mineralization we're drilling.
And you've also been doing some met work in the meantime, which is something I want to talk about.
Yeah.
Maybe we can do it right now, but met has recoverability has ranged strongly, especially for gold. So from about 69 to sometimes 96% and more. Where do you think it's a little bit less of a range for silver, but I mean, still on the higher end, it's still high. Where do you think it's going to settle over time?
That's a tough one. We have a lot more testing to do. What we had 3 separate labs that ran the mineralization, and that's given us a bit of an average. And I say it's an average, but it gives us a bit of an idea. We knew sulfide silver is easy to recover in these kind of clean vein systems where there's no deleterious elements. Our biggest thing, to be honest, was trying to determine if there's deleterious elements, because if there's deleterious elements, that's something we have to look out for when we're drilling, and those are probably the areas we want to avoid spending a lot of time and money, quantifying a resource in. All 3 labs reported no deleterious elements. They reported very clean concentrates after recovery through the metallurgical process. What I would say is silver is definitely going to be in the 90s, probably mid 90% range. Gold is going to probably be in the 90s. And then at that point, you're going to have to do a trade-off. You're going to have to decide, are we going to maybe take a bit more copper, or are we going to do just a zinc concentrate? Typically in Mexico, with all the mines that I've been involved in, you typically have a zinc concentrate and a lead silver concentrate. Copper is sort of the wild card here, but at the same time, it's so much more valuable than zinc and lead on a per pound basis that, you're going to have to do some horse trading and figure out ultimately what the optimum mix of byproducts is here. But you definitely want to get the silver and gold.
I'm glad you're bringing up zinc, because recoverability for zinc and lead isn't all that great right now. Is there something you can do to deal with the metallurgy and get better rates on the zinc and the lead?
Oh, yeah, definitely. Definitely. Because these were just early stage metallurgical tests. There's a lot more to do. And as I said, the metallurgical testing was more focused on ensuring that we don't have deleterious elements like manganese or other items that can affect the cleanliness of concentrates in Mexico. And as you probably know, I won't go through their names, but there's a lot of epithermal mines, especially high sulfidation in Mexico, that generate dirty concentrates. And some of them are actually amongst the more high-flying junior silver miners in Mexico. But ultimately, when they're shipped off to Torreon or one of the other big smelters, they have to buy clean con somewhere else to dilute it and clean up the ultimate mix before they smelt it. So from this process, that we know that, okay, this is going to be a clean con, but there has been no work metallurgically done on optimization of byproducts. But ultimately, I've been involved in 3 separate mines in Mexico. You want to see zinc and lead probably in the mid 70s. I haven't seen it higher too often. Sometimes you can get it into the low 80s, but if you're getting silver in the 90s, that's your key. And zinc and lead in the 70s would be great. The copper, though, is kind of the fly in the ointment here. We're still going to figure that part out, but I think ultimately, as you know, copper is considered in epithermal veins in Mexico usually deleterious when it's like 0.2% and less, because it does affect recoveries. So when our average grade, we have this page on our website with the average over 100 veins, over 100 holes, it's 0.64%. The actual copper average in the areas that we're drilling off to a resource are probably north of 1%. So it is going to be something you want to recover, and it's probably something you're going to want to take more of and leave maybe a bit of the lead zinc behind in order to maximize copper recoveries.
You're making me curious about those names, Daryl, but I'm not going to ask you. I'll leave it to the comment section to come up with them. I'm sure they will. What else? What else do you have to? I talked about water rights. What else do you have to get in the meantime from permitting? I don't know, locos or getting other stuff to work? You said water, explosive. What else?
So a couple of the sort of non-technical things we're focused on, and part of this is, we've done deals, Peter McGaw, Ruben Padilla on the board, David Medilek, president of K92 is on our board. We've put together mines before. And part of the process is, when you have a major come, they're not just interested, okay, this is your resource or this is your PEA. They want to see long-term community agreements. They want to see real estate acquired in the core areas. They want to see water tied up. They want to see explosives ready to go. They want to see all the intangibles and the tangibles. So one of the things we did here is once we made our discovery in 2017, where we drilled 8 meters of almost 2 kilos per ton silver, was we really pushed the intangible part of things, which was getting long-term community agreements signed. We have 2 ejidos, 1 municipality on the project. We're going to have a news release on it, but we're in the process of trying to negotiate 25-year extensions that cover exploration through exploitation, because that just gives a lot of continuity to a group that comes in ultimately knowing that this mine can run the next 20 years at this fixed cost per year. So that's one thing we've been doing. Water is always something you have to be cognizant in Mexico. It is a drier area. It has a rainy season, which just finished. So we have located areas that have good concentrations of water. Thankfully, a lot of it is old workings, have a lot of water in them. But we've also helped the communities, and we have a sort of a plan there to help them procure water. And as they procure water, we get a portion of that water. So that's one thing we're doing. And on the explosive side, let's put it this way. When you work in Latin America, when you have an opportunity to get something and the community says, hey, we're welcome, we're open to you giving you this permission, you never look at them and say, well, we're not quite ready for that because we're not at that stage of development. You tie it up when you have the opportunity. Sure. And so explosives is something that's come out of the woodwork that, hey, they're open to it. And as you know, there's a number of mines in Mexico that are having issues getting extra explosives permissions from the communities. And so our communities are gung-ho on it. They want the employment. They're willing to give us that. So that's something we're hammering out as we speak. And these are, of course, we're tying up water, power is something we're working on, explosives. This is all while we're pre-resource, which is really the horse before the cart kind of a thing in mining. But I think it's something that, we started because we built a few mines in our past, but more than anything, I think it's going to be more of a path forward now in the industry than we've seen historically, because permitting is not getting easier anywhere in the world. We saw Burkina Faso yesterday, and Colombia's at problems, and Mexico's at problems. A bunch of states in the US you can't even work in, can't build mines there. I think one thing you're going to see is the more well-heeled juniors, once they have a discovery hole and have the beliefs that they're onto something big, are probably going to start permitting at that point, as opposed to the old way of drilling off a resource, then doing your PEA, then doing your feasibility, and then starting to permit what your feasibility is considering. So for us, when we did our discovery in 2017, we said, okay, what is the ultimate goal here of the project? And the ultimate goal, we said, is something in the 6 to 8 million ounce per annum kind of production target. That's what we want to see on this project. And let's permit accordingly. And that's what we did.
Well, I understand that it's kind of take the permits while they're there, not when you need them type of thing, and water rights and explosive rights and all these things. I understand you want to go for them. I'm also wondering, given where the silver market is now, which is looking very bullish, do you want to be in that thought of the Lassonde curve where you're going into the resource and things are kind of slowing down, or do you have the ability to speed up operations and do more drilling, come up with more assays into the market, into that excitement?
Yes, I would say, the big thing, and we have this page in our presentation that shows where we fit into our peer group. One of the biggest difficulties we've had with Minaurum is we've been a bit behind on the resource calculation side, on the resource drilling side. The main reason for that has been COVID really hit this area of Sonora hard in 2020 and 2021. We drilled for about 4 months in 2020. Then we had to shut down for almost another year. Then we restarted late 2021 again. The thing was, our permitting side worked right through COVID and overtook the resource side of the, drilling off a resource. And now it's catch up. for the resource. So when we've been out there marketing ourselves, a lot of investors look at us and say, okay, you're getting good grades. This isn't optionality because the grades are over 300. We're not at 90 grams per ton bulk tonnage, 100 million ounces in the ground. Maybe it'll be a mine someday. These are strong grades, and they're double what the average underground mining grade is in Mexico right now. But the problem is our peer groups are all sitting there, the Vislas, Go Golds, Primes, whoever you could think of that has a resource that they're drilling out in the silver space right now in Mexico. They usually have 100, 150, maybe 200 million ounces in resources, but none of them have their permits. And we're sort of sitting there saying, hey, we have the permits, but it really is, we need to get that resource out so that we can then start being judged on a kind of an apples to apples basis with our peers. And more than anything, so investors can actually see that we are part of the peers that we believe we're part of, and some of the companies I mentioned. So that to me is sort of the biggest re-rating potential that'll occur with our initial resource. But as I mentioned, one of the things we want to do is get the initial resource out, and we're hoping that's, we're targeting something close to 50 million ounces pure silver equivalent, add another, say 30% to that number. But we want to get to that 100 million ounce resource as quick as possible after that. And we do, as I mentioned, there is a historical resource, 15 million ounces in the north. We do have other targets that we know are going to deliver ounces that we're not drilling off for this resource, but we believe we have, with everything we've seen thus far, we do have that 100 million ounce resource, but it's going to take us a bunch of drilling in the spring between the first resource and the second to start getting us to those higher numbers. Now, when you get to 100 million ounces, you're still doing resource growth. Now you're in that Lassonde part of the curve. I start wondering, I have a finance background, if once we can get to 100, conceptually that we can get there, and we do get there, what's the next stage? Does it make sense to add another 50 million ounces or another 75? Or does it make more sense to start going down the PEA route, feasibility route? Because at 100 million ounces, you already have maybe 15 years of production, 12 years of production, something like that potentially outlined. Maybe at that point, you're going to derive more value from where you are in the permit phase of things than just continuously drilling off more ounces. Because one of the things is, as you know, Antonio, is in the market right now, is there's a serious shortage of new high-grade silver discoveries. The reason, Silvercrest number 2 got taken out here last week. Everyone and their uncle is looking for new silver, especially in Mexico, just because it has a history of big discoveries. Some of them, like Peter McGaw and Mag, have moved into Utah, trying to make a discovery from scratch, a deer trail. I think if we can get around that 100 million ounce mark and show the potential for more, but also start advancing a bit more down the PEA feasibility route, to be honest, I see the bigger bang for the buck maybe doing that. And ideally, somewhere in that process, you get taken over. I don't think this is necessarily going to have to go to the mine stage because the permits are there. The camp has a history of mining. You have all the infrastructure there. You have a major highway that runs through the project. You have the labor force that's operating at Mexico's third largest open pit copper mine to the north of us. A lot of that labor force lives on the Alamos project in the communities. It just makes sense for, the companies that are out there looking for a new operation, that here is one that is sort of ready lock, stock, and barrel. But that ready lock, stock, and barrel, we need to get a resource, and probably 2 resources done before we can be considered at that stage.
To be able to drill it out that way, though, and actually get to that stage and 100 million ounces and all that is nice and well, but that's going to cost you a lot of money. It's not going to happen without a capital raise or a dozen or half a dozen. I don't even know, like a lot of money. But is that the way to go forward, though, equity raises, or would you consider doing a JV on the project?
So that's a tough one. We have gone. So what I would say is last year, we spent a bit of time on the private equity side. We had a number of private equity groups interested in the project. There's no shortage of interest in the project because it's new, it's big, it has big potential. Our market cap's a bit lower than our peer group. So we've had a lot of the who's who of Mexican miners come and visit it, want to keep, we had some groups that have been there 4 or 5 times already. Last year, because of the tough capital markets, we spent a bit more time on the private equity side. And private equity wanted to invest directly on the project level not on the corporate side, not into equity of Minaurum. I would say last year when silver was struggling, the equity markets were tough. We were, as you said, near a 52-week low of 11, 12 cents. I think a partner made a lot more sense. Now with equity and the cost of capital improving, I believe that probably the biggest bang for the buck comes in drilling off and financing that 100 million ounce mark. That may change, but what we're hoping naturally is we have enough capital to get the first resource out, get that resource out, and hopefully at that point our cost of capital gets a bit cheaper. And then we can start planning for how many meters we need to drill. And we have a bit of an idea. It's probably going to be, I would say, somewhere maybe in the $15 to $17 million range to get that next 50 drilled off based on what we know today. So it's not a crazy amount, but it is dilution at the end of the day. So one of the things we've done is we still have the private equity groups coming out. We still have the miners coming out. And I've told them, we're happy to talk at any stage of the development cycle, but talking finance again, I like to see mathematically, we come up with our spreadsheets and formulas, what can deliver the greater return for investors, i.e., bringing in a partner or taking the dilution to get to the next level of development.
And your number of shares outstanding is also getting up there. I mean, I said it's close to 400, fully diluted, you're over 400 million. Do you consider a rollback somewhere in the meantime? And I know it's the market cap that matters and all these things, but again, from an optics perspective, it doesn't look too good. So how do you think about that?
As I mentioned again, I've never done a stock consolidation in my career. I've been kind of adverse to them and the connotations it has, in the Howe Street, Vancouver side of things where, people drill, they don't hit, they roll back, do another project. We were different. We wanted to build that pipeline and build something more substantial with Minaurum. That being said, I think consolidations can help if there is not only it has to be the right time for it, i.e., you're doing a consolidation to get a main board listing on the New York Exchange. It has to be something material that that, okay, where we are in the market is silver's about to do one of its crazy runs. If we do a consolidation, go on the New York main board, we're going to get a ton of eyeballs on the story, put silver in the name, Minaurum silver, whatever you want. That kind of a trigger to me would make sense at some point. But right now, to be honest, we have a very large contingent of European backers, primarily family offices. We call them high net worth investors, but they're family offices, they're family run funds. There's no interest in them doing consolidation more than anything because of this big European contingent in our stock. What that creates is, how would I put it? With European investors, when you deliver on what you're going to say, first of all, it takes a long time to build the relationship. But when they get in, as long as you do what you say you're going to do, they follow you. Quite often they'll get excited and buy more shares, but they're not active traders. And because we already have such a large number of shares in the hands of non-active traders, if we consolidate and shrink that tradable amount, I think we're really going to see our liquidity shrink. And I'd love to, even at 400,000, 300,000 shares a day, that to me is a healthy level that you need to be at in order to attract institutional interest, strategic investors, because they need to know that there's an ability to get an exit if there's if the stock increases, they want to sell. If you do a 5-for-1 rollback or something like that, now you're at 100,000 shares traded, 150. Yeah, they're a lot more valuable, but I'd rather for now keep the liquidity where it is because I find that opens more doors and the European backers are happy with the share structure the way it is right now. But as I said, yeah, there are times where you can see it work. But I would even say, just as a general comment, I don't believe we're at that time in the market necessarily where I don't think we're quite there for stock consolidations. Because as you know, you see a lot of these juniors, they do a rollback, 10-for-1. They'll say they're 3 cents, now they're 30 cents, do a 10-for-1. Then they finance at 25. Then the stock drifts down to 15 again. And they just lose so much of their market cap. And I play a lot of juniors. I do play some optionality. It drives me nuts when I see a stock that went from, 40 cents to 3 and I buy it thinking maybe you have that headroom, you have some runway to make their money back. And then they announce 10-for-1, a new management group. And then you've lost all of your, upward volatility that you could potentially have otherwise, your upward leverage. And so that's where I'm sort of, I have to keep those things in mind with Minaurum and the share structure. My shareholders are happy, but is there a time where it makes sense because it can bring a lot more eyeballs to the story?
Mm. It really does seem that in this type of market, when you do a rollback, that's really mostly a reason for people to short you back down to your previous per share price, which sometimes can be, again, 90% lower your market cap. And that could be painful. On the topic of raising capital, though, I think a couple of the other projects that you have in portfolio, you're kind of seeing as optionality too. What does that mean more specifically? Are you looking for partners, options? What do you want to do with them, and how much of tangible value can they create?
So, one of the issues we've had as a company, not an issue, but it's been a blessing. We've had Peter McGaw ultimately and intimately involved in the company. We had David Jones, who's Mr. Guerrero Gold Belt, intimately involved in the company. Both of them were well positioned, had good options packages, and they gave us the vast majority of projects, or they, brought them to the table for the company. When you have a guy like a Peter McGaw, or in the past a David Jones, saying, "Oh, this has some excellent potential. The asking price is dirt cheap." It's tough to say no to it because, if you're going to say no, they're going to take it to another company and probably build a junior around it. And we always wanted a bit of a pipeline, much like Mag had. Mag had Juanicipio, Cinco de Mayo, had other projects in its pipeline. And that's what we wanted to do with Minaurum. But one of the realizations with the tougher capital markets is you have to be efficient at allocating capital. And one of the decisions we made last year was to really start ensuring that our cost, or the capital we're using on the non-core projects, is minimized as much as possible. And so what we did is we said, okay, what are the projects in the company we can't live without? And that's obviously Alamos. That is Santa Marta. That is Orifero. And now it's Lone Mountain if we exercise the option in Nevada. Of those, Alamos has, I think, the greatest potential for the amount of money to be spent on there in the near term. Santa Marta has never been drilled, but it is a very large potential project. It's a kind of what I call it's a junior dream project, in that probably a 3,000-meter drill program can tell you if you're on a major copper deposit or not. And those are the kind of things we live for. So Santa Marta is definitely not going anywhere. Orifero is something that is really high grade. As you can see from our presentation, there's a number of drill intercepts that are, over 20 meters of 3 grams per ton gold from surface. It's never been drilled at depth. We're the kind of group that loves to go into those things, do the risky deep holes, and see, what the guys were missing. Maybe there's nothing, maybe there's a multi-million ounce gold deposit, but that's the kind of potential we like to see. Now, some of the other projects like Taviche, which is next to Fortuna San Jose mine, Biracu, which is in the heart of the Guerrero Gold Belt, we see those projects as being maybe a bit more capital intensive and ultimately lower reward, not necessarily geologically, but through market attention, like Biracu. Guerrero Gold Belt is a bit of a tough place for investors. Torex has had a lot of success. Equinox done pretty well in the Guerrero, but it's an area I can't raise money for anymore. So that's an area that, we're surrounded by majors. Maybe there's a deal to be done there, an option deal. Taviche, it's next to an operating mine running low on ore. Maybe there's another deal to be done there. So we're sort of looking at those non-core assets. And the idea is we have Adelita and Sonora that we JV to Infinitum Copper. We've retained 20% carried through resource and PEA interest, got some stock that are on our balance sheet still. If we can do that on our non-core, that would be great. It gets the holding cost down. One of our biggest issues has been in Mexico is our holding cost, which falls under our G&A. As far as even a year ago, I would say our tax bill in Mexico was approaching $1 million per annum just to hold the projects. And that's not do anything on the projects. That's just holding them in good standing. And that was reported under G&A, not under exploration costs, because there is no exploration for that. That's just going into the government's hands. And so that we've lowered by dropping some claims, and now we're in talks to do some JVs and lower that dollar amount significantly more.
I'm already taking more of your time than what you had promised me, so I don't want to be I want to try and be respectful of your time. At least try. What am I forgetting to ask you here? Maybe we should do a second conversation, talk about all the other things. But what else is important for now that you had hoped we'd talk about, but I'm failing to bring out?
No, I think you've covered it all. The real value driver for us and the catalyst is getting that initial resource out. As you said, it's been 7 years. We've drilled 101 holes. So before this most recent program, we had drilled 42,000 meters of drilling, 101 holes. We have historical data that's very complete for another 8,000 meters of drilling, and now we're doing another 8,000 meters of drilling. So by the time of the resource, we're going to be close to 60,000 meters of drilling on this project. So that drilling gives us a good level of certainty as to the nature of the veins. It gives us an ability to determine zonation, where we can predict these silver shoots occur. But also it gives us, as I said, an idea that, okay, we only take two of these and move them to the initial resource for this one, but we already have another three that we have a bunch of holes into that we can move to the next resource. And only after that are we going to start having to make new discoveries to add ounces at that point. So what you're going to see from us is you're going to see a bunch of drill results coming out these next few weeks. You're going to see a resource at the end of the year. You're probably going to see a news release on intangibles, community agreements, maybe purchasing real estate in the camp for a potential mill site. We're kind of working on that as well. You're going to see those kind of de-risking news releases. On the other projects, I probably wouldn't expect too much because we're not doing too much on them at the moment. But you will probably see something on the Lone Mountain CRD project that we signed the option up in Nevada. We'll probably get some news out on that at some point.
Awesome. Well, Dara, thank you so much for sitting down with me in the meantime, and hopefully we can have a conversation as you move along. Thank you so much.
Thank you, Antonio. Appreciate it.